chat right here. So hello. It's been a while since I've done a stream. This is going to be pretty straightforward and easy. It's just there are people freaking out about the Bitcoin price, but even a month ago. So this is the Bitcoin price, but even a 50% drop, guys. This is pretty nutty. This is pretty nutty, a 50% drop. It's not like we've never had this ever before in trading history with Bitcoin. It's not like, if you don't understand how Bitcoin supply works, that this totally makes sense. Let me go and grab a chart out of the crypto chat. I really liked one particular chart from this guy here. Let me see if I can bring it up. So yeah, guys, let me know how you're doing. Let me know if there's any specific questions you've got. There we go. That's what I want. Okay. This chart right here. All right. So like a month ago, I was saying, hey, we got things going on in Bitcoin. Not a month ago. This was January 31st. I was saying, hey, we got to be careful with crypto miners liquidating their positions. Guys, you see this? This is a sticker RAM. This is incredibly valuable right now. This little thing I got too. So, oh man, my sides hurt a little bit. I laughed so hard. A sticker RAM, man. It's so good. All right, Kari. Yeah, nice to see you. Nice to see you. I see you guys in the chat. If you're here, you can go ahead and say stuff in chat. I'll be watching it as we go through this. So, look, this is expensive as hell right now because a lot of manufacturers for all these different computer parts are going over to AI. The backlog is now for like 2 years. All the supply is going to AI companies. Apple got knocked off into a lower priority for TSMC. Like, there's all these companies that want hardware, but they can't outbid the AI companies. And a sector of those companies that are getting knocked the hell out right now are all these big mining companies. So there's a few handful of mining companies that are, I think, the argument, the thesis here, I don't have any data to back all this stuff up, so I'm just kind of shooting in the wind here. But I think that this dump that we're seeing is frugally and forward-thinking minded miners. Because notice when this thing started dropping out, it's when all those contracts started coming through for, oh my God, you know what? If we could real quick get Amazon RAM prices graph or chart. There's all these news articles saying you can go and watch Amazon RAM prices go up in real time. So around the middle of October, you started to see the RAM prices go haywire. Look at where we got the RAM prices starting to go haywire. I'll go ahead and copy this image, paste, unhide everything. All right. It's over here. You can see the edge of my green screen. Anyways, right here, you can see, okay, here's October 14th is when things started to go haywire. So now RAM goes from like $80 to $150. Now it's really bad. So this really started taking off around here. Look, I don't think it's coincidental that all of the prices for all of these computer parts go way up, and then you start to see companies liquidate their Bitcoin to buy some more hardware. Because if you're a miner and you're growing, you have to buy more power. And now you're competing with getting grid, essentially making your own little mini grid, buying all of the power generating hardware, buying all of the mining hardware, the ASICs. All of that just went up and up and up in the last few months. And a lot of these mining businesses are going out of business because they literally do not have the margin. And now with Bitcoin price falling through the roof, there's actually an incentive by really large miners that are very well capitalized right now, who can pull a lot of credit to stay afloat and just eat the loss in order to push out and essentially bankrupt and get out of business as many competitors as possible, so then they have more of the hash rate to themselves. This stuff is pretty damn cutthroat in the mining industry right now. If the Bitcoin price can be suppressed for as long as possible, frankly, that will induce mining companies that can't get credit to go out of business, and then they'll have to liquidate their Bitcoin, and they'll have to sell their mining rigs, and they'll have to sell all their infrastructure and their power generators to other people, who probably to larger conglomerates or wholesale to whoever. Let's see here. Glad to see you. Oh, hey, all right, yeah, nice to see everybody. I hope so far it's been rather entertaining. I'm gonna get Opus to do some clipping for me of this stream, so I'm particularly high energy, but I have so many announcements. It seems like I've been away doing nothing for so long, but in reality, I've been working hard every single day. I've been, just to prove that I have actually been doing stuff, and not even everything is on this page now. But if I go to my GitHub profile, sometime around November, I started people are like, Joe, what are you doing? Where's all your stuff? Oh, look, it's not even showing the full history. Wow. I have to screenshot how much work I've been doing since I've started tracking my stuff. So around November, I'm like, hey, I probably need to start using GitHub just so I can track my productivity. I'm doing work. I went on vacation during Christmas. You can see that. And then, I think I just closed my Chrome. Guys, I'm on Omarchi. I can do that. I do Windows key W, and it closes everything. I really wish in Brave browser, I get a little notification saying, hey, are you sure you want to close all of your open tabs with one key press right now? Are you sure you didn't mean just to close one tab? Okay, let's see here. History. Restore window. Thank God. Thank God, it's so simple. And then for 2026, here's what it is for 2026 so far. Not as active, but February's been a lot more active. I did some stuff in January like I can't do. Also, some of these big fat days where I made a bunch of commits are things like, oh, I've been working the last 3 days and I didn't do any commits. Oh my God, I just did it again. Oh my God. Oh, it's such a bad habit. Oh, it's such a bad habit. Oh, it's such a bad habit. Oh man. High punishment. If I can remember Control Shift. Yep, there we go. At least I'm remembering the hotkeys to do this faster now. Oh my God. Oh, Marchie is amazing. I love GitHub grind. Yeah, dude. Dude, this is gonna be a lot of fun. I'm not gonna go over any PineScript GitHub stuff, but I am currently working on a rolling window library for PineScript. It's like the most used algorithm in any single PineScript it's the single most written algorithm in every single PineScript indicator. Everybody writes at one point or another their own rolling window algorithm to store things in arrays. So I'm just making my own rolling window library, and it's, dude, I am so thorough with my stuff. The thing is 5,000 lines of code. It is so heavily documented. It has usage examples. I have extra runtime errors in there to say explicitly like, hey, this parameter is screwed up. You need to change explicitly this thing. So I make all the errors really nice, and I make sure to handle undefined behavior properly, and I make sure that everything's in line with how PineScript currently has things set up. So I'm really, really, really looking forward to that release. And I did something very similar with the last thing I released, which was a counting library. It literally just goes 1, 2, 3, 4, 5, right? You give it some condition and it counts the condition, right? Oh man, dude, I think editors picked. It was nice to see that. It was very nice to see that get editors picked. I was very happy about that. I hope this next one does too. But I don't like hang my hat on whether or not something, like, I don't try and build stuff to get editors picked, you know? It kind of should be the other way around. You build really good stuff, and because you've built good stuff, you get editors picked on TradingView. That's how it should work. I honestly haven't seen someone so excited about an algorithm in a while. Yeah, no, dude, I use this in so many of every single one of my indicators uses this algorithm. And it's a really dumb, stupid algorithm, but I use it so frequently and I write it so often, it is worth my time to create a TradingView library to get it built and get it out there. Oh man. Yeah, and not only that, I have, I'm particularly happy about it because I have like these fancy optimizations for things that will be announced when it's released. Like, it goes fast, man. It goes fast. In some situations, it's faster than some of the built-in PineScript functions for a handful of things. But really, really, really important things. Really, really, really important things when you're trying to create indicators. It's just so, and not only that, like, there's a big problem when you're building your version of the algorithm constantly. You're having to copy paste the code into all these different versions of the indicator. When you have a library, you build an optimized version of the function one time, and then it's done. And you can just, there's no copy paste. You just import the library, call the damn function, and you're on your way. You don't have to think about it ever again. And then, oh, there's something new I can change. Oh, there's something new I can upgrade. Let me go ahead and update this library. You go ahead, you do your technical stuff, you update the library, and then all you have to do is change the version number of the library in all of your scripts, and boom, they're all upgraded. They all have the new fancy algorithm of whatever the heck. Yeah, man. It's going to be really, really cool. Now, this is going to be a trading stream, right? This is really focused on like, hey, what's going on right now with this stuff with Bitcoin. Well, I wanted to kind of hone in on this thing. I think I already went through it. The link to these tweets are in the description. So yeah, the argument for going offline and liquidating is this new hardware. So as all these AI companies scoop up and inhale and hog all of the hardware, as they do this to all of the computer manufacturing companies, as they do that to all the computer manufacturing companies and just take all their stuff and say, we will pay you so much money for all your stuff. It wrecks the hardware availability for all these miners. So new hardware gives advantages over miners with old hardware. So the handful of miners that are able to withstand this drop are actually going to be able to collect the hardware and the energy generators, and sometimes the land of the companies that decide to just exit because of this drop. And those companies will consolidate and grow. If you can't get new hardware or comparable hardware to like whatever is the latest, like ASIC or something, you're better off liquidating and waiting until the next cycle of hardware becomes available, largely available. There's more product, but that might not come for like 2 more years, right? Unless a miner can figure out how to buy and pick up the limited hardware available that's like the best and the fastest, I'd expect most miners are going to see a decline in profitability until hardware supply returns, or just to put a caveat here, or enough miners go out of business because Bitcoin drops, and people liquidate their company. So look, I get there's that thesis, I get, but you know what, for a lot of people, they just see the price go down and they're like, oh my God, I own Bitcoin. Oh my God, I just lost 50% of my money. Oh my God, I have all these bills. Oh my God, I wasn't expecting to have to hold onto this thing for so long. Oh my God. And just all the stress that comes with making financial decisions, right? Everyone has those experiences. But let me, I'm not going to say I'm going to be able to totally help those kinds of people out with this video and what I'm about to say. But what I will do is tell everyone why I'm buying into this dip. I got in at 63, and I'll get in again at like the mid 55s if we go down. And we can go into poly market odds and, Bitcoin's projected to go and crash below 50,000. Yes. This is exactly what I want to see. Please keep posting this stuff. Please keep posting this stuff, because this will directly turn into money for people who actually know what I know and what most guys who do on-chain analytics frankly expect. Look, I get it. There's a lot of guys on crypto Twitter and who do technical analysis. I have a pivot points indicator, that's TA, but over the last few years, I've been doing more statistical indicators. I have range probabilities. I have probability pivot points, which uses seasonal data. I have timing dots. Dude, I've shifted towards doing more statistical indicators, or indicators that are based on some kind of fundamental metric, like FX yield spreads. We're not going to get into all that right now. But what I'm saying is the group of guys who generally don't know too much of the history or the tech or even the philosophy rationale for why Bitcoin exists, a lot of those guys are just going to be lost. And even if I explain what I'm about to explain, this is going to go right over their head. So let me just get this out of the way. Where does Bitcoin get its value? Since like 2015, this is what I have been saying. It's a logarithmic supply, creates an exponential demand. Cryptography protects that supply from being manipulated. That's the simplest way. Let me kind of expand on that. This is the Bitcoin supply. Now I'm kind of standing in the way here, so let me move myself over. There we go. Okay. So you guys can see this red line. This is the supply line. This supply line is the shape of a logarithmic curve. And if we go to the Bitcoin wiki, you can actually see the projected Bitcoins over time. And you can see like, oh, here's how much of the Bitcoin supply gets minted. And here's the block rewards, and here's when the block rewards are expected to have and what year and all that. I've been following this page forever, all right? Now, the Bitcoin supply is at a maximum of 21 million, but optimally, we never get quite to 21 million. We just keep having and having and having and having the block reward, never quite getting theoretically the 21 million. However, there should be a day when we do get to the maximum supply. All right. And if you know that there is actually a story or I'm not going to go too deep into it, but there's a really I think Simpson, Jim Simmons. He actually, as a kid, was when he was doing a quant interview, he was doing an interview about his life, and he said, I knew I was interested in mathematics when, as a kid, I was discussing something about over a distance, you can go halfway and then halfway and halfway and halfway and halfway and never quite get to the end because you're constantly cutting whatever remaining distance you have to go over a distance in half. That mathematically, continuously, it generates an asymptote. That's what this is. We get logarithmically closer and closer and closer to 21 million, okay? Why care? Why anything about this? Because this is the supply regime. This is how supply is injected into people who participate in the crypto Bitcoin economy, okay? When you know the supply, and it's a fixed supply, actually there's a quote at the very top of this page, a fixed money supply or supply altered only in accord with objective and calculable criteria, so predictable to an extent, is a necessary condition to a meaningful, just price of money. It's a very, very nice quote. From a guy who died, I think, 60 years ago. So this page is really, really, really nice. You can find it here in the link to the tweet in the description. It's very simple. Bitcoin has a logarithmic supply with an asymptote of 21 million. And in Economics 101, you learn the inverse of supply is demand. And the inverse of demand is supply, right? The inverse of our logarithmic supply is what? Well, mathematically, the inverse of a logarithm is an exponential. Guys, if you go to a Bitcoin chart, this is a regular linear price scale. This thing goes like this. You can see how it's rapidly going faster and faster and faster and faster. The price of Bitcoin is exponential. Yet when you go on crypto, Twitter, everyone's like, oh, you have to view it on a logarithmic scale. This is why you have to look at Bitcoin on a log scale. This is why you have to do that on your chart in the first place. Because the supply is logarithmic, it creates an exponential price. So in order to have it fit on your chart properly, you put the price into a log scale. All right? Now, mining and the immutable ledger blockchain immutable ledger technology create the economic structure and activities, that's what Satoshi invented, to ensure that the supply curve is not manipulated. So all this cryptography, the entire reason why we call it cryptocurrency, the entire reason cryptography is involved in this internet magic money in the first place is explicitly so then people don't screw with this red supply curve. That's it. So then you can't go and print an extra million or delete an extra 5 million. Because if you're able to screw with the supply curve, you're able to move the price arbitrarily with the supply. That's why we have currencies move up and down, they ebb and flow as central banks change how much money gets printed. As they constrict the supply, things get the price of, you have depreciation, and as they inflate the supply, things get less valuable. So when you have a fixed supply and you can guarantee through cryptography that supply is fixed over time and it reduces over time, you get people who are willing to actually invest significantly all the effort into generating the supply curve and thus being rewarded and then generating this price, generating this demand curve. Now, this is why I wanted to pull up this guy's chart here earlier. There's this dotted line here, this black dotted line. That is roughly the amount of Bitcoin supply in ETFs. Now, these are on two different scales here, so it's not necessarily equivalent. But you can see as people accumulate Bitcoin, you have prices generally going up, and as prices go down, maybe there's a bit of selling, right? But to move prices in a Bitcoin market now, it requires less and less and less Bitcoin to actually sell. Now, we sold a lot more Bitcoin, minus 87,000 Bitcoin, in the most recent sell-off here, this one, versus this one over here, right? So over here, we sold how many? Tell me, Mr. Chart. 55,000 Bitcoin were sold in this sell-off. 87,000 Bitcoin were sold in this sell-off. I think the extra Bitcoin sold here is due to miners exiting because they literally cannot get the hardware to compete in the mining market with the few companies that are actually able to get access to the mining hardware. So as you get these dips in price through market activity, guess what? That doesn't change the supply. It doesn't change it. That's why I'm very, very excited. When I see headlines like this, I'm like, yes, go lower. Yes, go lower. Because it becomes easier and easier to, in my mind, because of this fundamentally, when you actually understand what it is you're trading, it's a lot easier to have certainty, probabilistically, right? Not complete certainty, but higher degree of certainty in the decisions you're making. The more you learn about the world, the easier at trading things get. Period. You learn more about geopolitics. You learn more about institutional research. You learn more about the technicals of whatever crypto you're trading. You learn more about, central banks, the largest companies and how they move stuff. Hell, learn more about Taylor Swift and the whole economic phenomenon that she was, going from one country to another. there's a lot to learn about the world, and you can't just look at one individual factor in isolation. Most of the time, sometimes it's like, oh, 80% of this thing can be described by this one little factor. I mean, there's those things, yeah. But most stuff in life has to be looked at holistically. It's also in markets. So, yeah, a lot of stuff to consider. A lot of stuff to consider. So I'm happy I got to talk about this is my annual Bitcoin talk, because I've talked about this explicitly multiple times. Okay. Oof, excuse me. Also, I noticed I had a a tweet here. People are going to talk about this dip in Bitcoin yesterday for a long time. Guys, that was the last time we traded at 20,000. that was pretty good. And you can see all my time-stamped marks. Man, that was pretty damn good. That was pretty damn good. Pretty damn good trading tools. So when you have moves this extreme, very few tools, if any tools, work at all when you have moves this extreme. I'm going to go ahead and throw up this indicator that I made, range probabilities. It's a returns profile. That's one way of describing it. You know what volume profiles are? Then you know what this is. Except instead of volume, it's returns. So straightforward. So simple. Now, I look at this and I see, hey, most of the lows for a given month usually are either here, right off the low, like right very, very close to the open, actually, or a bit lower, right? You have this peak here in the profile, in the distribution. This is where most of the lows most of the time occur. And then once you get past this line here, this thing says 40%. That just means, hey, 40% of the lows that occur in this distribution, 40% of the lows are below that line. That implies that 60% of lows or bottoms for the month occur above that line. So this indicator doesn't give you timing. It gives you like, hey, over the span of the month, this is usually where tops and bottoms occur, above this line or below this line for the month. That's what it's telling you. It's not telling you when to buy or when to sell. There's the timing dots here. I did mention those. We kind of have to adjust a parameter in these. I really don't like adjusting parameters in indicators, but this one needs a parameter at the moment. We'll automate that at some point. I think we're going to need like 2.5% around that time. Yeah. Whoa. Okay. We have data. We actually have data here. Wow. Okay. Let me bump it up just a little bit more. See if we get, we got a few. Okay. This is going to be good. This is going to be good. Let me go ahead and move myself back over here. Ooh. Whoa. Jumping across the screen here. A dev recognizes a dev. Don't worry. Oh, okay. So I'm just getting back to the chat, man. Just getting back to the chat. Yeah, let me know who's still here. I'm still looking at stuff here. Man, I really look forward to doing more streams. But what I see here from these little speckle of dots. Now, the thing is called timing dots, so obviously it's supposed to help with timing because these ranges, this distribution doesn't help with timing. Well, I see a lot of dots around here, and that's that. But the closest we have to the current low are these set of dots right here, so very, very, very low probability signal. There's just not that much data here. Sometimes lows occur around here, and then sometimes you get like really far lows around here. So I would be concerned for Bitcoin like absolutely tanking more than 60% past here. And I actually have two reasons why. So there's these dots, right? So you can kind of segment these dots into two clusters. You have this cluster here, these lows, and you can kind of include these. And then you have these lows here that you got to worry about. Now, there's not that much data, but this looks all the way back into the chart history, and we're on the BTC index that has all the chart history. So let's use as much chart history as we have to try and make an argument here. The other thing, the second thing that I noticed, you probably don't see in the distribution, right? It just kind of tails off. That's what we want visually for this to look like. But I'm looking over here at these percentages, because if you look at these percentages tell you, hey, there's this big fat bar here. What percentage does that relate to? What's the probability of finding the low for the month, given all the data we have for all the months, from going to the beginning of the chart? What's the probability of finding the low in this particular area right here? Well, in this circumstance, this says 13%. In this circumstance, it says 8%. In this circumstance where where the low currently is right now, it says 1.74%. But what I like to focus on is not necessarily the absolute values, unless we're talking about the peaks, the modes. So we have a peak here and a peak here. That's what I pointed out earlier, right? But we also have situations where, oh, here's your peak, and then we get a trough. So the odds decrease going to this trough. Then the odds increase again going into this next peak. And then they decrease again going down here. So I like to look at also the rate of change to try and identify these peaks. Because if you look here, there's no peak. It's all flat. But if you look at the percentages, right here, it might be hard to see, so I'll read it out. One sec. Let me just delete it. This goes from 1.6, 1.7, 1.7, 1.8, 2.1, 2.2, 2.3, 2.0. And then it really falls off. 1.4, 1.2, 0.9, 0.8. So right around here, we actually do have a spot where the odds are increasing up to about here, and then they rapidly fall off. This, though, these are very small odds. These are very, very small odds. And if there's any kind of dip, maybe that's where I'd expect, in the mid 50s. If there's another dip, I don't know if there'll be another dip. I don't know how far this thing will go. But at least I have tools where, guys, like, if I have to go, I mean, I'll just pull up Eurodollar here. We have this line here on Eurodollar that I was tracking for like 2 years. This ray from this high to this high extrapolated forward. And then if I go ahead and hide all the indicators, you can see price last week hit this spot, and I had a freaking massive like 400 pip trade last week. This is for guys in the trading group, but now that the trade's over and all that, this was great. This was great. This line, this ray, this TA, I just put it on there because I'm like, okay, neat. That played no part in me actually making the decision to do this trade. I prefer nowadays to use as little technical analysis as I can, because I've found a lot more consistency in just looking at the odds, looking at the dots, and staying up to date on geopolitical research. So, for example, all this stuff going on with the miners, way back over here, as soon as the hardware started getting really, really, really expensive, it's like, oh, that's really not going to be good for the miners. That's really not going to be good. And if you already understand that really competitive, really brutally competitive dynamic where these other mining companies in a situation like this want to actually try and suppress the price of Bitcoin for as long as possible in order to squeeze the creditors of their competitors, the credit of their competitors, not necessarily the creditors, but they want their competitors to accumulate as much loss and have as much negative margin as possible. And kind of an in-access, not have access to as much of the best, latest hardware for mining for as long as possible. So then they can have as big of an advantage as possible and have as huge of a margin as possible. So they can make as much Bitcoin and as much money as possible. So this is, I would arguably say, could be an effort to push out miners that aren't sustainable or robust to these kinds of moves. And that's going to cause those unsustainable, non-robust, anti-fragile, right? Those very fragile miners to exit the business. This has happened so many times. I don't know if this is actually what's happening, but this is something that has happened in the past, and it's something I would genuinely not be surprised to see shortly in the future. Now, if Bitcoin is going down for 2 or 3 months, most miners are going to be able to weather this storm, right? Most miners will be able to pull money from somewhere. So there is a real possibility that if that thesis does pan out and the miners want to try and do some consolidation, they will try to suppress the price for as long as possible to get their competition bankrupt. They're playing Monopoly here. I'm trying to make the other players go bankrupt. Yeah. Actually, it's a lot like Monopoly now that I think about it. You can think of all the boards on the Monopoly board, all the hotels and, all the railroads and everything. That's like getting the contracts for all of the ASIC supply. Hey, if you don't have this contract, if you don't have this piece of the board here, you have to pay me like a huge multiple in order to get access to this hardware to run your business and to make it profitable. Because if you don't buy this, I'm going to use the hardware and I'm going to sell it to your competitor too. And we're going to be able to increase our hash rate, increase our margin. And because you're using older hardware, you're going to lose out on margin and you're probably going to potentially become non-competitive. I'm like banging on the point here, but I don't see anyone else talking about it. That's all. I don't see anyone else talking about it. So there is potential here for things to be suppressed or go sideways for a while. I got in because I think, oh man, I can make like a quick buck here because there'll be people buying against this, right? And I think there'll probably be some kind of end of month, not trading advice, right? I am expecting some kind of end of month reversion and then another drop. That's kind of what I'm expecting. I'm expecting some kind of move up again and then another drop. That's based on the assumption that this whole thesis with miners trying to get to consolidate more of the reward actually pans out, right? Anyways, so that's the Bitcoin thesis. That's the Bitcoin analysis. We did a little bit of going over range probabilities and the charts. very, very cool stuff. And I think it'll be a good time to end now. We've been going on for about 30 or so minutes, so I'll say thank you guys for watching. We're going to be doing more stuff. We're going to be doing more. Remember to get into the Discord. The Discord is going to get a bit more active in the future. I have a few projects to announce that actually aren't indicator related, and a few things that I have to still build out. But all in all, we are moving along. I'm moving some business things along. I'm gonna have some new stuff for you guys who want to see more of me. Well, yeah, I really want to say, but I don't want to ruin the surprise. Okay, all right, I'll go ahead and end stream here. I will see you guys in a bit. I'll see you guys on Discord, and remember, if you want these indicators or the trading group or anything, I'm not gonna push it so hard. That's on WAP. Go ahead. It's the Baus benchmarks link in the description. If you want to trial it, go ahead and trial it. And I'll see you in the Discord, and we can talk more about this sort of stuff and go over trade plans. And you can see my trade logs. You can see exactly what price I traded this today, actually. Bitcoin. All right. See you guys in